Good morning.
Good morning, Professor.
How are we doing? Let's wait, let everybody come on and then we will start. How is everybody day so far?
Okay.
Old, snowy, okay.
Snowing in New York?
Yep.
New Jersey.
Oh, in New Jersey. Okay. I think we are going to get, it's probably about 70 something degrees there now. And we're probably going to get, it's 79 degrees already. We're going to get like 84 today.
Oh my gosh.
Yeah, so snowing.
Jealous.
Yeah, we have a lot of snow here.
We could walk around in short sleeve shirt and short pants.
Are you in Orlando, Professor?
I am right outside of Orlando. I'm in a town called Claremont.
Okay.
West of Orlando, about 20 minutes west of Orlando.
Yeah. My best friend lives there. It's really nice. I was just there in December.
You were there in December, you said?
Yeah.
Claremont is basically flat. However, Florida is basically flat. However, Claremont is the one part in Florida that have some rolling hills.
Yeah. She lives in Oakland, which is right. Yeah.
Oakland is down just next to us.
Yeah. Mm-hmm.
Oakland is flat. Claremont is not flat. Where I live up in the hills. I'm probably the second highest point in Florida.
Oh, wow.
Wow.
Hills in Florida doesn't go together, but we happen to have somewhere we live. And the temperature where we are at is generally about 3 to 5 degrees lower than Orlando. So in the summer when Orlando is very hot, we are much nicer. I was up in Fort Lauderdale for the weekend. I was in Hollywood Casino hanging out.
Mhm.
It's hot there. When it's 80 something degree in Fort Lauderdale, it's very, very hot. And when it's 80 something degree in Claremont, it is really nice. It's not hot for us.
Yeah.
Now, for you guys in New York, I don't know, but for some reason, the same 80 something degree in Fort Lauderdale is much hotter than the 80 something in Claremont. And the same thing in New York. In New York, if it's 70 degrees, it's warm. We could get 70 degrees and it could be chill. I don't know if the humidity plays a big part in that. So
Yeah, probably.
anyway, how are you doing with the course so far? You could unmute and we could chat before I get into my lecture. Every Thursday before I get into my lecture, I'll chat with you for about 5 minutes. So you could unmute your mic if you need to chat with me, if you need to ask a question, if any comments on how we're doing so far. Anybody having any problems with the course status, not your boyfriend?
Not really.
Now, if I go to the course website, let me share my screen. And I go to the discussion board. Okay. Chapter 1 and Chapter 2 homework closed. I think it closed on February 16. I don't know if you could see this there, but I could see it. You probably can't see it. Since it's closed, there are 18 homework done for Chapter 1. There are 15 done for Chapter 2. I think we got about 19 or 20 students in the course. So some people are slacking up on their homework. So the homework is an integral part of your grade. Do not slack up. They're easy grading points to get. At the end of the semester, almost every semester, somebody is saying, Professor, I got an A or a B on the exam. How come I got a C or a B on the course? Well, because you weren't doing your homework. Okay. The homework is a third of the course. If you don't do the homework, the best possible grade you could get is probably a D+. Right? So please do your homework, do all of your homework, okay? Today we're going to talk about Chapter 3. So after we finish talking about Chapter 3, you could work on Chapter 3. Let me see if I have a due date for the homework. You may not, I don't know if you're going to be able to see this. Today's what date?
18.
Today's the 18th. Okay, I got it to display until 3/2, but I'm going to change that date. It's sometime in next week. Your homework for chapter 3 is going to be due. Okay. Did I post the due dates of all the homework for chapter 1 through 21 through 3 or somewhere? Can't remember if I did. Anybody remember seeing that? I know I tell you what chapter 1 and 2. Did I tell you when chapter 3 and 25 is due?
Yes.
Yeah, I think so, on March something.
Okay, so it should be up on
It was on the same schedule.
Okay. I just want to make sure we're all on the same page. And yeah, I think it's on March 2nd. Is it on March 2nd, I said? Okay, so
Probably.
once we finish chapter 3, you can start working on your chapter 3 homework. I post all my lecture to YouTube. So if you go to www.youtube.com and you just type in Bo Barose, my page will come up and you'll see your lecture in there, the introduction, chapter 1, chapter 2. This week I'm going to put in chapter 3 there once we finish chapter 3 lecture. Okay, so if for some reason you missed class or for some reason you didn't have enough of me and you want to see some more, go there. Okay.
Okay.
All right, let me get out of the screen and let me go to my lecture page. Chapter 3, Audit Reports. And I said I linked chapter 3 with chapter 25 because they both come under the broad heading of Accountant's Report. Chapter 3, we're going to talk specifically about audit reports. In chapter 25, we're going to talk about other reports. Audits are not the only service that accountants do. They also do reviews and compilations. And those are the three main areas of where the accountants in the audit field perform. There are other smaller areas which we're going to talk about, but those are the three main types of reports that we do. Audit report number 1, sometimes we do a review or sometimes we do a compilation. We'll talk about reviews and compilations in chapter 25 and other special services that we will do that come under the auspices of auditing. Now, what are we going to learn in chapter 3? We're going to describe the parts of the standard unqualified audit report for non-public entities under AICPA auditing standards. Public entities are governed by the PCAOB, Public Company Accounting Oversight Board. Non-public companies are governed by the AICPA. Now, let me tell you how powerful this audit report is. The audit report is generally 1 page long. And based on that 1 page, companies will invest millions, if not billions of dollars, based on that 1 page that the CPA says that the financial statements are fairly stated. So the audit report is a very powerful tool. But for it to be powerful, the CPA who is issuing that report have to be very credible, have to be highly credible. Now, the auditing profession and the CPA profession is the most credible profession you have around. Because based on that 1 page report, and I'm not saying this because I'm a CPA, based on that 1 page report that we issue, companies are going to invest millions, if not billions of dollars. They do not do that for any other profession, not even the priesthood profession. Sometimes we said that the accountants bless the financial statement. When they issue that report, they bless the financial statement. So we are being placed right there next to God. We could issue blessings more than what the priest could do in some situations. So if you're aspiring to be in this profession, you have to be a very credible person with strong work ethics. You need to start that from now. It should be in your DNA. It should be how you operate. It should be in your nature. You should always try to speak the truth and nothing but the truth. Let me deal with the consequences later. So we can talk about the parts of there are 8 parts of the standard unqualified audit report for a non-public entity, and we are going to talk about them. We're going to talk about we're going to specify conditions that require to issue a standard unqualified audit report. When do you issue that report? What must be present for you to issue that standard unqualified report? We will talk a little about understanding reporting on financial statement internal control under the PCAOB auditing standards. We're not going to focus a lot on that because this is not a course on SEC accounting. However, we're going to talk about it to bring your awareness that it is there. When you start doing your graduate studies, you could take a course on SEC accounting, where you will study all the auditing guidelines for public companies. It's a little different from some of the stuff we're talking about in this course, although we touched on it over and over. Now, when I did my graduate studies at Brooklyn College, I did one course in SEC accounting. And that one course propelled my career in that area. I spent about 12 years doing consulting. I used to lecture for the State Society on SEC accounting. There's a big market in that area. You just look at the companies around, look at the businesses around. The majority of the large businesses are all public companies. They trade on the stock exchange. I skip a page. We'll describe the 5 circumstances when an unqualified report with an emphasis on matter, explanatory paragraph, or modified wording is appropriate. There are going to be situations whereby the standard unqualified report, we want to modify it. And there are 5 such situations. We're going to talk about all 5 situations when you issue that modified report. And how do you modify your report? 5, we're going to identify the types of audit report that can be issued when an unqualified opinion is not justified. There's some other types of report that we may want to issue because the company financial statement is not prepared in accordance with GAAP. 6, we talk about how materiality affects auditing reporting decisions. Is it material? Is it not material? Is it moderately material? 7, we're going to draft the appropriate modified audit report under a variety of circumstances. They have examples in your text. 8, we'll determine the appropriate audit report for a given audit situation. And 9, we'll understand the use of international accounting and auditing standards by US companies. My son is calling, excuse me, let me just take this, okay? Hey, Abby. How are you doing, son? Okay, folks, I'm back. Sorry about that. My son is calling from Colorado and he's coming home this weekend for the weekend, so you have to make plans. These are the things when you're working from home, family gets in between, whether it's my granddaughter, my son, or whoever. But those are the things that make our life worthwhile, right? Okay, back to where we were. International accounting auditing standards, we're not going to talk about a lot in this course, but they basically parallel the US accounting standards. Hold on a second, my granddaughter wants me. I thought she was calling for me. No, she's okay, leave her. Okay, I'm back. So we're going to talk about the part of the standard unqualified audit report for non-public entities. You come say hi? Say hello. Everybody say hello to Bethany. You see everybody?
Hi, hello.
Hi.
Hello.
Oh,
Yep. Gonna go with mommy. Let Nana do his work. Hmm? All right, kiss Nana and go. Come, kiss Nana and go.
Hi.
Yeah, he would have hugged me. Thank you. Say hello now. Say bye. Say bye. Yes, dear. Blow them a kiss. Blow them a kiss. Let's say bye. Okay, then kiss me. Kiss them. All right, come go with mommy now. Okay. Okay, guys, I'm back. Can you hear me? Tell me.
Yeah. Yes, we can hear you.
Okay. These are the little beautiful things in life that we all strive for, you know. Children, family, grandchildren. This little one is the love of my life. So whenever she wants me, I got to try to be there. These are the benefits of working from home. Now, back to where we're at. The standard unqualified audit report. The standard unqualified audit report of a non-public company has 8 parts. What are the 8 parts? We have a report title. We have the audit report address. We have the introductory paragraph. We have the management responsibility paragraph. We have the auditor responsibility paragraph. We have an opinion paragraph, the name and address of the CPA firm, and the audit report date. If you could remember the standard unqualified report, then it's easy to remember all the other variations. In practice, we don't have to memorize this report. We need a report, we take one, a sample, and we just change the name of the company and the date and modify it for what we need. We do cutting and pasting, right? Not another item what CPA stands for: cutting, pressing, pasting, and alteration. That's what we do to the audit report to make it suit our needs. So let's look at the audit report. Let's see if I could expand this little. I guess not, I can't expand this. Anyway, so if you have your text, turn to figure 3.1 on page 48. The standard unqualified report. Now, there are 8 parts. And the parts are labeled to the right. In the old days on the CPA exam, they sometimes ask you to draft an audit report. When I took my exam, we had to draft an audit report. And a lot of my colleagues who were taking the exam thought that they did extremely well on the question. But little did they know that they flunked the question, because the report has 8 parts. Most students in the profession start writing the paragraphs. Well, if you look at 4 parts of this report, the report title, and the title must contain the word independent, is independent auditor report or independent accountant report. And the report address to the board of directors and stockholders. Those are quick grading points. Those are 2 parts. And you go to the bottom, the name of the CPA firm, and the date of the audit report. Those 4 items are half of this audit report. So if you draft the nicest audit report and you don't have these 4 items on it, guess what? You flunk the questions. So they were busy writing the paragraph instead of giving a complete report. If you're ever asked in your career or in any exam to draft an audit report, take the easy grading point first. Take the easy grading point, the title, the address. Then you could put introductory paragraph, manager responsibility paragraph, auditor responsibility paragraph, scope paragraph, and audit opinion. And then you put your date and the CPA firm name. Now, when you get time, you can go fill in those paragraphs that you leave blank. And if you do that, the grader will say, oh, this person knows exactly what they're doing. They know what has to go in this report. Although they haven't written a nice report, they got all the parts in there. Think about it. Can we function with half of our parts? No. Likewise, the audit report is useless unless you have all the parts on there. So anytime you're asked to draft an audit report, make sure you have the report title. And this report is generally done on the accounting firm letterhead, which is at the very top, the accounting firm letterhead, Anderson, Zinder, and PC. But you want to report title. The title must contain the word independent. It could say independent auditor report or independent accountant's report. Either one is fine. It must address to the shareholders or the board of directors. If it's a small company, it might be addressed to the owners, right? Like a sole proprietor or a partnership. If it's a partnership, it will be addressed to the partners. And then you have the introductory paragraph. The introductory paragraph identify the financial statement that is being audited. It's identify the financial statement that is being audited and the time period that the financial statement covered. Now, I'm going to read this introductory paragraph. We have audited the accompanying balance sheet of General Rings Corporation as of December 31st, 2016 and 2015. And the related statement of income, changes in stockholder equities, and cash flows for the years then ended, and the related notes to the financial statement. So what does identify? This identifies that the CPA firm has conducted an audit. You want to highlight or underline audit. And they're doing an audit for 2 years, December 31st, 2016 and 2015. This company have a calendar year end. It's also identified the statements. There are 5 parts to a set of financial statement. When you're issuing an audit report, all 5 parts must be present as required by generally accepted accounting principles. You have the balance sheet, which is as of a specific date. So the balance sheet will be as of December 31st. You have the statement of income, changes in stockholder equity, and cash flows, which will be for the entire year from January 1 to December 31st. So it will be for the years then ended. And you'll have the footnotes. The footnotes are an integral part of the financial statement. So you have to have all the footnotes that are required by generally accepted accounting principles. So the introductory paragraph identifies that you're doing an audit. It identifies the years covered and the company covered, and it identifies the financial statements. Okay. The management responsibility paragraph. Management is always primarily responsible for the financial statement. It is their financial statement. They're the one that prepare it. They're the one that is responsible to see that the financial statements are prepared in accordance with GAAP. They're the one that are required to see that all the appropriate disclosures are made. The auditor is just verifying that these things are done. So let's look at the management responsibility paragraph. Management is responsible for the preparation and the fair presentation of the financial statement in accordance with accounting principles generally accepted in the United States of America, which is GAAP. This includes the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of financial statements that are free of material misstatement, whether due to fraud or errors. Highlight that term, free of material misstatements. We're not preparing financial statements that are accurate. We're not preparing financial statements that are correct. We're preparing financial statements that are free of material misstatement. What does that mean? It means that the financial statement can contain misstatement, but those misstatements are not of the type that will influence the user decision. When we talk about materiality, when we say that something is material, it means that it will influence the user decision. So when we say that the financial statements are free of material misstatements, we are saying that they are free of such misstatements that are of the magnitude or the importance, or both, that will influence the user decision. Now let's talk about materiality for a little bit. We're going to come back to materiality later in this chapter, but let's talk about it a little bit here. Materiality has two characteristics. There's a quantitative characteristics that deal with the dollar amount in relation to the financial statement. Is this dollar amount big enough? So size doesn't matter. Is this dollar amount big enough to influence the user decision? So one deal with the size. The other characteristics of materiality deal with the circumstances under which it occurs. Although it's not big enough, but the circumstances under which it occurs makes it important. Now, let me give you some example. Think if you have a contract where you should provide a company with $1 billion of goods, at least $1 billion of goods. Company operating in that magnitude, a few $1,000s will not be material. But what if those few $1,000s cause the company not to meet its obligation under the contract? Then those few $1,000s will now become material because the company is in default of a contract. Let's take your situation. Let's forget about plus and minuses. Let's assume we're having grades of A, B, C, D, and F. Now, from 80 to 89, and 9 points upward in your grade, you still got a B, right? And 89 is a B, 80 is a B, assuming we have no plus or minuses. So 9 points from 80 to 89 is not material. How about from 89 to 90? Well, if you move from 89 to 90, you move from a B to an A. So from 89 to 90, 1 point upward in your grade becomes material. So the circumstances under which it occurs make that 1 point material. The next paragraph is the auditor responsibility. Here we are telling the reader of the financial statement in our audit report, we are telling them what is our responsibility in regards to the financial statement. And I'll read the paragraph. Sorry, I don't do a lot of reading, but I have to read this report because it's an important report. It got a lot of key terms in it, and I want to explain them all before we're done with it. Our responsibility is to express an opinion. Highlight that phrase, express an opinion. By saying we are expressing an opinion, it means that we can be wrong. Our opinion could be incorrect. A lot of times we're asked to, as everyday person, we are asked to give an opinion on something. Does it mean that what we say is correct? No, it's based on the facts we know. This is what we think. So our responsibility is to express an opinion on these financial statements based on our audits, based on the work that we did. And we use audits because we're talking about 2 years, 2015 and 2016. If we're talking about 1 year, it will be singular audit. We conducted our audit in accordance with auditing standards generally accepted in the United States of America. We conducted our audit in accordance with GAAS, G-A-A-S, generally accepted auditing standards. Those standards require that we plan and perform the audit to obtain reasonable assurance. Highlight that term, reasonable assurance. Reasonable assurance, what does reasonable assurance mean? Reasonable assurance is different from absolute assurance. Reasonable assurance in this context means that based on our audit, based on what we examined, based on the work we have done, we come to the opinion or the conclusion that the financial statements are fairly stated. Highlight that term, fairly stated, or free of material misstatement. Free of material misstatement and fairly stated will be used interchangeably. It means that there could be misstatement, but those misstatements are not of the type that will influence the user decision. We do not say that the financial statements are accurate. We do not say that the financial statement is correct. We are saying that the financial statements are free of material misstatement. Or to put in other words, the financial statements are fairly stated. It means that there may be misstatement, but those misstatements would not be of the type that will influence the user decision. The scope paragraph. The scope paragraph tells the reader the scope of the audit work and what an audit is. An audit involves performing procedures to obtain audit evidence about the amount and disclosure in the financial statement. Let's go to this term, audit evidence. What is audit evidence? Audit evidence are information that the auditor gathered to help them reach the conclusion that the financial statements are free of material misstatement, or that the financial statements are fairly stated. In chapter 7, we'll spend an entire chapter talking about audit evidence, the type of audit evidence that we gather, and how these audit evidence interplay with each other. The procedures selected depend on the auditor's judgment, including the assessment of the risk of material misstatement of the financial statement, whether due to fraud or error. Highlight that term. The procedures selected depend on the auditor's judgment. As an auditor, you must have good judgment. Now, like anything else you do in life, judgment comes with practicing. If you practice something over and over, you get good at it.
Excuse me, Professor. So how do you determine the materiality?
We will talk about that later in the course. Okay, this is only one of several chapters. We will spend a chapter talking about materiality. But you have touched on materiality in financial accounting. But it's a good question. How do we determine materiality? I can't fit that in today because today I'm focusing on audit report. But one day we're going to focus on materiality, and we're going to talk about how you determine materiality. Okay, we have a chapter on that. All right?
Okay, thank you.
That's a very good question. Thank you. So, if you're a ball player, if you're a basketball player, You become good by practicing over and over the same thing. If you're a golfer, you become good at hitting the golf ball by doing it over and over. If you're a singer, you become a good singer by singing it over and over. It may be the same song, but you practice it until you perfect it. The same way judgment, for us to have good judgment, we have to be making judgmental decisions over and over. And the same way, like when you play baseball or basketball, when you first start shooting the basketball, it doesn't go well. Right? I started playing basketball when I was, I think, 31 or 32 years old. I was a cricketer prior to that. But my son was born and he was a year or two old. And he likes basketball. So I start playing basketball. I go to the park and I'm shooting the ball. I'm throwing it on the hand. It's not going in. So I asked one of the guys there, I said, teach me how to throw this ball in the hoop. And they teach me how to shoot. So I shoot it over and over. I go to the park. I learn to play until I occasionally got pickup games. The guys just want to pick me because I don't know what to play. But as I play over and over, I get better at it until I used to play in York College in the gym with the school team. Right? And for a good part of my life, I was a basketball coach in AAU in high school. Win a couple of championships also. So by doing it over and over and over, I get good at it. Same with judgment. You have to start making judgment. And by making judgment, you can make the wrong judgment many times. But by doing it over and over, you're going to get good at it. Now, when you start working in public accounting, you're going to come in as a junior accountant or a staff accountant. And you're going to work under a senior accountant or a manager, and they're going to guide you. But you should not be afraid to make judgment call. And when you make your judgment call, you could discuss it with your senior. Hey, this is what I think based on the evidence I looked at. They'll tell you, hey, you know what? You're correct. Or maybe you're not correct because of so-and-so. They will explain to you why you're not correct. So a lot of you who have younger brothers, sisters, or if some of you are older like me, you have kids. You don't want them to make judgment. Why? Because they're going to make the wrong judgment. Well, this is all part of growing up. They have to make judgment. If they don't make judgment call, then they will never be independent. So you should encourage your kids, encourage your young sibling to make judgment. I know one parent was telling his kids, I don't want you to be a follower. I want you to be a leader. But every judgment call that the kids make, the parent make it for them. You think these kids are going to grow up to become leaders? No. To be leaders, you have to make a lot of judgmental calls. Now, these kids grow up. None of them are leaders. Why? Because the parent dominated the judgment call for them. They were never trained to make judgments. When kids are of a teenager age, when they think they know everything better than everybody else, you have to let them make their judgment. And then you teach them the consequences of their judgment. So they learn that if you make bad judgment, there are going to be consequences. And the consequences are not going to be pleasant. So to be a good auditor, you need to make good judgment. That judgment will be developing over time by making judgment over and over. So when you're working with the senior, you should be making some judgment call and check it with them so that they are there to guide you and help you develop in your judgmental process. In making those risk assessments, the auditor consider internal control relevant to the entity preparation and fair presentation of financial statement in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity internal control. Now, what is internal control? Internal control are the policies and procedures that an organization implements to safeguard its assets, and to ensure the reliability of the financial statement. We will spend 2 chapters, chapter 11 and chapter 12, talking about internal control. Internal control and audit reports are about almost half of the CPA exam, at least about 45% of the CPA exam. So they're important topics. It's important that you know them and you understand them. Accordingly, we express no such opinion. So we are not expressing opinion on internal control here. Although in public companies, when we're doing public company audit, we also express an opinion on internal control. Non-public company, we do not express an opinion on internal control. An audit also includes evaluating the appropriateness of accounting principles and the reasonableness of significant accounting estimates made by management, as well as evaluating the overall presentation of the financial statement. Estimates made by management. A lot of things that we do in accounting are estimates. Depreciation is an estimation technique of how the assets is used. Whether you use sum of the year, straight line, or double declining balance, you get different depreciation results. Inventory cost flow assumption is an estimation. We use FIFO, LIFO, or weighted average, we get different results. Bad debt expense is an estimation. So a lot of what we do in accounting, we are estimating. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. Now we have the opinion paragraph. And in the opinion paragraph, we are stating our opinion. We're clearly stating, in our opinion, based on our audit, this is what we think. And we can be wrong. In our opinion, the financial statement referred to above presents fairly in all material respect. Presents fairly in all material respect. There may be errors, but those errors are not material. There may be omissions, but those omissions are not material. The financial position of General Rins Corporation as of December 31st, 2016 and 2015, and the results of their operation and cash flows for the years then ended in accordance with accounting principles accepted in the United States of America, in accordance with, yeah. Then we have the CPA signature and the city and state where the firm is located, and we have the audit report date. The audit report date is the date where in which you complete basically all the important tasks for the audit. So the audit report is dated on the date you complete all the important tasks for the audit. So this is the standard unqualified opinion that has 8 parts. Now the next question is, when do you issue this opinion? What are the criteria that must be present? What are the characteristics that must be there for you to issue this opinion? Turn over to page 50. Condition for standard unmodified opinion audit report. We call it unqualified, we call it unmodified. Those 2 terms I will use interchangeably. Your texts call it unmodified, some texts call it unqualified. In practice, we call it the unqualified opinion. If you go back to the report itself, it's telling you parts of the standard unqualified audit report. Okay. So unqualified and unmodified will be used interchangeably. So what are the situations that must be present? And there are 4 of them on page 50. One, all statements must be present. The balance sheet, the income statement, the statement of owner's equity, and the statement of cash flows. All must be present. If any one is missing, you cannot issue the standard unqualified opinion. Two, sufficient appropriate evidence has been accumulated, and the auditor has conducted the engagement in a manner that enables him or her to conclude that the audit was performed in accordance with auditing standards. So you must complete the audit in accordance with auditing standards, and you must have sufficient appropriate evidence. Now, what are the auditing standards that we talked about in Chapter 1 and Chapter 2? Well, they're the general standards. And the general standards talk about the personal qualities of the auditor. And this is a review. The auditor must be independent, must be competent, and must act with due professional care. What do we mean by due professional care? It must act with the level of care that we expect from a qualified professional. Then we have the standard of field work, and there are 3 standards of field work. The audit must be properly planned and supervised. There should be an understanding of internal control. We just talked about internal controls. Internal controls are the policies and procedures that an organization implements. So the auditor needs to understand that. What are those policies and procedures? And 3, sufficient competent evidence must be gathered. The auditor must gather sufficient competent evidence. So those are the standard of field work. Then we have the standard of reporting, and there are 4 standards of reporting. The financial statement must be prepared in accordance with GAAP. What are GAAP? All the rules that you study in Accounting 101, 102, 201, 202, 301. All those courses deal with the studying of GAAP, generally accepted accounting principles. So GAAP must be consistent.
Professor, could you explain the difference between the qualified and then the unqualified report?
You haven't got there yet. Don't jump the gun.
Okay.
Here we're talking about the unqualified report. We haven't got to the qualified yet, so you shouldn't understand the difference yet. Okay? But it's good that you're reading ahead of me. I appreciate that. Promise you, I'll get to it before this lecture is over. Okay? Okay, here we
Okay, thank you.
Third one, the financial statement are wait, I was talking about the 10 standards. So the standard of reporting, financial statement prepared in accordance with GAAP. GAAP must be consistently applied from one period to the next so that you could compare one year with the other. There should be adequate disclosure, all the disclosure required by GAAP. And then there should be an expression of an opinion, the audit opinion. Third, the financial statements are presented fairly in all material respect in accordance with generally accepted accounting principles. So there could be errors, there could be omission, but those errors and omissions are not material. And 4, there are no circumstances requiring the addition of an emphasis of a meta paragraph or modification of the wording or audit opinion in the report. So those are the 4 conditions that must be present for you to issue a standard unqualified opinion. And these are the conditions in slide 2 here, okay, that we just talked about. Actually, slide 9, I said slide 2, part 2. somebody just asked me a question. Can you ask me back that question again? Sorry, I did not pay attention to the name. Something to do with the difference between a standard, unqualified, and a qualified, was it?
Oh, I just asked you the question, Shoshana.
So can you repeat that question for me?
I was asking you what's the difference between the qualified and the unqualified report.
So here we're going to talk a little about the qualified report. When you audit a financial statement, there are 4 types of opinion that you could come to. Okay, there are 4 types of opinion that you could come to. Let's step away from the report for a minute, and let's talk about the practical situation. One of my friends asked me to look up a girl for them to see if that girl will suit them for marriage. Now, after I look up this girl, I have to report to my friend, right? Well, there are 4 types of report I could give back to my friend. One, I could say, you know, that girl is perfect for you. You should marry her. Or I could say, no, that girl is not good for you. That girl is not good for any man to marry because of so and so. Stay away from her, right? Those are 2 opinions I could give him. 1, she should marry you. Or 2, you should stay away from her. She's not good for you. I could also say, 3, she's good for you. However, she talks too much. But if you could tolerate the talking, then she's fine. If you can't tolerate the talking, she's not a person for you. So let's get back to the report, the audit report. Let's draw the parallel between the audit report and this. The standard unqualified report is like I'm saying to this guy, hey, she's fine and dandy for you. Get married to her. You guys are totally compatible. No issues. In the standard unqualified opinion, you have no issues with the financial statement. The second category said, hey, this person is not good for you. Too many issues. That's the adverse opinion. You have too many issues with the financial statement for it to be good. And 3, I could say, this person is okay for you, but we have an issue, and if that issue is not a problem, then you're fine. This girl talks too much, or this girl complains too much. If you could deal with that, then it's fine. That's the qualified opinion. Everything looks fine except there's one item of concern, or there's some items of concern. So in an unqualified opinion, there are no concerns. In a qualified opinion, there are some reservations. There are some concerns. It's like the girl that is okay, but she got some bad habits. That if you could tolerate the bad habits, they're okay. If you cannot tolerate the bad habit, don't get into that situation. Did I clarify that? Yes, no?
Kinda.
So in a standard unqualified opinion, everything is fine and dandy. The financial statements are in accordance with GAAP. In a qualified opinion, the financial statement, for the most part, are in accordance with GAAP, but there may be one or more than one material items that are not in accordance with GAAP. So they become a level of concern. Okay. Now, here, they showed you 4 categories. actually, in most texts, there are 4 categories, but they don't present it this way. They have the standard, they have the unqualified opinion as one category, and the unqualified opinion have 2 parts, the standard unqualified and the unqualified modified. Then we have the qualified opinion, and then we have the adverse opinion. And fourthly, we have a disclaimer of opinion. Now, what's a disclaimer of opinion? The guy asked me to look up the girl for him. I can't find any information on this girl. I can't meet her, I can't see her. And then he asked me, what's your opinion on her? Can I give him an opinion on her? No. So my opinion will be, I cannot tell. So in the disclaimer of opinion, you cannot tell whether the financial statements are fairly stated. Why you cannot tell? Because you were unable to do the audit. For whatever reason, you're unable to do the audit. Whether you're sick, whether you lost your independence, or whatever, you were not able to do the audit. So you have to issue a report that says that you did not do an audit and you're issuing no opinion on these financial statements. So that's the 4 categories of audit report. Any questions so far? You're doing good? Topic number 3, understanding reporting on financial statements and internal control under PCAOB auditing standard, PCAOB, Public Company Accounting Oversight Board. That's what PCAOB stands for. Part 3 deal with public companies. We're not going to spend a whole lot of time on it, talking about that, unless you're doing a course in SEC accounting, but I'll run through it very quickly. Reporting on internal control over financial reporting. Auditors of public companies subject to Section 404 of the established of the Act must report on the effectiveness of internal control over financial reporting. PCAOB auditing standards. 5 require the audit of internal control to be integrated with the audit of financial statement. But they're saying that for public companies, when you audit the financial statement, you also have to do an audit of internal control. So when you give an opinion, you're giving an opinion on the financial statement, and you're also giving an opinion on the system of internal control. Whereas in non-public company, you do not need to give an opinion on the system of internal control. Now, how did this come about? How did PCAOB come about? Going back before 2010, we didn't have any PCAOB. We didn't have any report on internal control for public companies. But somewhere before 2010, when the market gets sour and the economy get bad after 2006, between 2006 and 2009, a lot of the big companies were going out of business. 2 of the well-known, one was Enron, which was audited by one of the big 8 accounting firm then, which was Anderson and Company. And the other, which is Welcome. There were several other companies in the tech industry that were going out, and the public was asking for answer. How come the auditor gave a clean opinion and the company went out of business? Well, all the clean opinion says is that based on our audit, our opinion is that the financial statement is fairly stated. Our job as auditors at that point is not to look into fraud or whatever. It was a management responsibility. So the public was asking the SEC and the accounting profession, what is going on? So the profession had to do something. And that is where they said the SEC came out with the Sarbanes-Oxley Act Section 404, and the PCAOB, Public Company Accounting Oversight Board, was formed. There were legislation, Congress had to put some legislation, and asked the SEC, hey, what you guys are doing? And the SEC came out with these regulations. See? And that's how these laws came into play, the Sarbanes-Oxley Act. So the Sarbanes-Oxley Act requires separate reporting on financial statement and internal control of a financial statement. And it tells you what the paragraph, instead of having an 8-paragraph report, we're going to have a 6-paragraph report with an introductory paragraph, a scope paragraph, a definition paragraph, an inherent limitation paragraph, an opinion paragraph, and a cross-reference paragraph. And then they give you examples of the report. I don't want you to know this report, but I want you to know the other report. Okay. The 5 circumstances when an unqualified report with an emphasis of a matter, explanatory paragraph, or modified wording is appropriate. So this is also an unqualified report with modified wording. We're going to modify the wording because certain things are present. It's still an unqualified opinion, but we're going to have an unqualified opinion with a modified wording. These are the 5 situations. The first one is the lack of consistency in application of generally accepted accounting principles. We have to have consistency. The same gap that applied to 2018 should apply to 2019 and 2020 so that we could compare one year with the other. When there's a lack of consistency, the financial statements are still fairly stated, but we need to bring that to the reader attention because they're going to try to compare it. The second one is substantial doubt about going concern. What is going concern? Whenever we prepare financial statement, we prepare financial statement under the assumption that the business will continue to be around, the business will continue to exist. Sometimes we have indication that the business may not continue to exist. And if we do, we will want to add an additional paragraph beneath the opinion paragraph explaining those situations. The third, the auditor agrees with the departure from an accounting principles. If there's a departure from accounting principles and you agree with it, you need to specify it in your report by adding an additional paragraph. 4 is an emphasis of a matter, something of importance that doesn't make the financial statement misleading, but the reader needs to know about it. Let's say the company have inventory in a warehouse, and after the year end December, in February, the warehouse had a fire and all inventory burned up. Would that affect their business? You bet. The auditor may want to bring that to the reader attention. And 5 is report involving other auditors. Now, of these 5, number 2 and number 5, you will see very often. The other 3, you're not going to see so often. Lack of consistency in application of GAAP, you wouldn't see very often. Companies do not change their GAAP very often. Rarely they change their GAAP. But it's there, it sometimes happens. Number 3, the auditor agree with the departure from accounting principles. In my 30-year career in the business, I only seen that once, and I did it for a client. I departed from GAAP. How this happened? We were auditing the parent company in New York, and they had subsidiary in major parts of the world. One subsidiary they had was in Sierra Leone, South Africa. And that subsidiary was a diamond mining operation that they had purchased for over $2 million on a share-for-share exchange. Now, when you have a share-for-share exchange, you have to value the transaction at the price of the shares that have a more prevailing market price. And since the company was a public company, it was very easy to establish the price of the share. I value the company at 0. Why? Well, there were tribal wars going on in Sierra Leone. So I did not want to make that trip to Sierra Leone to see if this mining right exists or not. Because if I go in there, chances are I may not come with a life. And I like living still. 2, the conservative principle says that it's better to understate than to overstate. So I value the mining right at 0. A year later, we're having our peer review, and the peer review guy asked the same question: why you value this at 0? It should be valued in excess of $2 million. And I explained that to him. And that's the only time I see a departure from an accounting principles. So these are very rare. However, substantial doubt and reports involving other CPAs, you will see them very often. So I'll spend more time talking about substantial doubt, and I'll spend more time talking about reports involving other CPAs. So lack of consistency in application of GAAP, this is rare, but the auditor must note circumstances in which accounting principles are not consistently applied, and the auditor should modify their report when a material change occurs by adding an explanatory paragraph in the report. So just before the opinion paragraph, you will add a paragraph explaining the situation. You have examples in the book. I'm not going to go through the examples since it's so rare. Substantial doubt about going concern. Think of this. If we go to the doctor today and the doctor says that, diagnose that we have this rare disease, that we are terminally ill, meaning we are not going to live too long, but we will die in about 6 months. Will that change your life? Most of you might probably drop out from right? Most of you might drop out from college and say, you know what? I got 6 months. Let me try to enjoy it. Some of you might start crying from the time you got that news. And instead of enjoying the rest of the 6 months, you might be miserable for the next 6 months. But it will change our life in a very dramatic way. Likewise, if the company may not survive for long, you want to bring that to the reader attention. What are some of the conditions that cause the company not to survive for long? 1, they're having losses. Every year they're having losses. Do you think they'll continue to exist? No, they may be running out of working capital at some point. 2, they're kind of insolvent. They have an inability of the company to pay its obligation as they become due. If that is happening, chances are they can go out of business. 3, the loss of a major customer or the occurrence of a catastrophe. You get a hurricane in Florida and you wipe out the company. Chances are they may go out of business. Today, as we speak, you're seeing that quite a few businesses are going out of business due to COVID-19, especially restaurants and so on. Right? Legal proceedings. The company have a lawsuit that if they lose that lawsuit, they could go out of business. So these are the conditions that affect the company. And the company have a going concern issue. You will add another paragraph beneath the opinion paragraph explaining the going concern. Auditor agree with the departure from an accounting principle. This is very, very rare. The departure may require a qualified adverse opinion. The auditor must separately explain in the audit report that adhering to the principle would have produced misleading results, and the circumstances must be unusual. Now, in your accounting, in your financial accounting, you talk about extraordinary items. An extraordinary item must be unusual in nature and infrequent in occurrence. Well, here, all we require that the item to be unusual. It doesn't have to be infrequent in occurrence. If you're talking about hurricane in Florida, that's not infrequent, right? Almost every year we are expecting to get some sort of hurricane. But hurricane is unusual. Emphasis of a matter. The CPA may want to emphasize specific matter regarding the financial statement, even though the CPA intends to express an unqualified opinion. What are some of these things? Financial statement comparability, subsequent event, related party transaction, and material uncertainty. If this occur, you're going to have a paragraph explaining the event. And the last but not least is reports involving other CPA or other accountants. Let me give you an example. I am the auditor auditing a company in the United States. The company have a subsidiary in a foreign country. Let's say they have a subsidiary in Hong Kong. The subsidiary is audited by KPMG, one of the big 4 accounting firms. But by giving my opinion on the parent, including the parent books will be the subsidiary. For those of you who took Accounting 301, you have to consolidate the financial statement. So I will give an opinion on the consolidated financial statement that includes the subsidiary. Well, I got 3 courses of action I could take. 1, I could give an unqualified opinion. If I give an unqualified opinion, then I'm taking responsibility for KPMG work in Hong Kong. Although KPMG is one of the big 4, I do not want to take responsibility for their work. I don't know what quality of work they do. And guys, don't feel because they're the big 4 that they do a great quality of work. Arthur Andersen, then one of the big 8, was auditing Exxon when they went out of business. And Arthur Andersen went out with them because they were doing some things that were inappropriate. You do not hear about Arthur Andersen anymore. They were one of the largest accounting firms in the world. So that's not suitable for the auditor. Or I could do a second thing. I could qualify the opinion, which is number 3. But the client generally do not want a qualified opinion if they could get an unqualified opinion. An unqualified opinion is the best possible opinion that a company can have on their financial statement, and every company strives to have an unqualified opinion. They'll do everything possible for them to have an unqualified opinion. Well, there's a third category, which is number 2 there, is to make reference in the report, to modify the report. I'll modify the report in the scope and the opinion paragraph. In the scope paragraph, I'm going to say that I audited the parent and some other CPA firm audited the subsidiary. And in the opinion, I will say, in our opinion, based on my audit and the report of other accountants, the financial statements are fairly stated. So let's look at how this opinion looks. The opinion is on page, figure 37 on page 58. The auditor responsibility, and I'm going to read this, sorry, I have to. In the auditor responsibility paragraph, I'm going to read, our responsibility is to express an opinion on these financial statements based on our audit. We did not audit the financial statement, so in addition to the regular standard auditor responsibility, you're going to add this piece starting with the second sentence. We did not audit the financial statement of Stewart Payne and Lighting, the wholly owned subsidiary, which statement reflect total assets consisting of 20% and 22% respectively of consolidated total assets at December 31st, 2016 and 2015, and total revenue consisting of 18 and 20% respectively of consolidated total revenues for the year then ended. So we're telling them what we did not audit, what portion of the financial statement we did not audit. Stewart Payne and Lighting, and what percentage that consists of the balance sheet and the income statement. Those statements were audited by other auditors. We don't need to tell them who those auditors are, whose report has been furnished to us, and our opinion insofar as relates to the amount included for Stewart Payne and Lighting is based solely on the reports of other auditors. We conduct our audit in accordance with auditing standards generally accepted in the United States of America. Those standards require that we plan and perform the audit, etc., etc. So we're going to include those two sentences there, telling you that the subsidiary were audited by other auditors, what percentage of revenues and assets that subsidiary make up, and that the other auditors report were furnished to us. Then in the opinion paragraph, in our opinion, based on our audit, and you want to underline the other phrase, and the reports of other auditors. So you'll add that phrase in the opinion paragraph. This you're going to see often because a lot of companies today have subsidiary all over the world. And it's cheaper for those subsidiaries to be audited by an auditor. Think of this, if a parent company have an operation in India, it's cheaper to have that operation in India audited by an auditor in India than to send somebody from the United States to audit it. So you see this very often. Every year I'll do a few reports when I was in auditing, a few reports of these, right? When you're going to be in auditing, you're going to see this even more than I see it. So this is what is called a shared opinion. Now we move on to audit report other than unqualified. What are those reports? A qualified, an adverse, and a disclaimer. A qualified opinion you're going to issue when something is wrong with the financial statement. It's material, but it's not major material. If it's major material, you will issue one adverse opinion. A qualified opinion you're going to issue when certain things, you have some cannot tell situation. You are unable to do part of the audit. If it's material, you will qualify the opinion. If it's highly material, you will disclaim the opinion. So, one, there's a scope limitation. A scope limitation means that there's something that prevents you to do your work that you should do. If it's highly material, you'll give a disclaimer. If it's moderately material, you will give an qualified opinion. If it's not material, you'll still give an unqualified opinion. Two, there's departure from gap. If it's highly material, you'll give an adverse opinion. If it's moderately material, you will give a qualified opinion. If it's not material, you'll give an unqualified opinion. And then three, the auditor is not independent. If the auditor is not independent, the only thing you could do is disclaim the opinion. That's the only thing you could do. Now, what are some of the things that could cause an auditor not to be independent? Well, there are two major things that comes to mind. Independent means that you're unbiased. You're auditing the client. Halfway through the audit, the client offer you a job as a vice president. The mere fact that they offer you a job, you now is no longer unbiased. Since you were engaged to audit the client, you have to issue a report, and the report you have to disclaim the opinion. The second thing, the situation. Now that first situation, I almost came close to that years ago. I was auditing a company in Brooklyn, and they wanted me to be their controller. So I had to inform them that there should be no discussion until after the audit. Second situation, you're auditing the company, and the controller is this beautiful person that you fall in love with halfway through the audit. And these things happen. If that happened and you're a junior or a senior on a job, ask the partner to reassign you. If you're the partner in charge, you have to disclaim the opinion. So a qualified report can result from a limitation on the scope of the audit or a failure to follow generally accepted accounting principles. And they give you an example of a qualified opinion on your text. What page is that? Figure 3.8 is a qualified opinion. Figure 3.8 is a qualified report due to a scope restriction. And figure 3.9 is a disclaimer due to scope restriction. Figure 3.10 is a qualified opinion due to a non-GAAP. And figure 3.11 is an adverse opinion. So I want you to look at those. Figure 3.2, table 3.2 on page 67. That is a very important table because it summarizes everything we have talked about in one table, all the different reports in one table. So page 67, table 3.2, that's the one you're going to photocopy and you'll take around with you so that you memorize it. On your date this Saturday night, walk with that. It's a good date breaker. There are two good things about your accounting courses. One, if you want to break a date, pull out your accounting textbook or audit textbook. Not too much people are interested in that. Or two, when school was on, if you're walking in Jamaica Avenue late in the night and you got your accounting or auditing textbook and you put it in a bag with a long handle and somebody tried to do something inappropriate to you and you just swing that and hit them on the head, then you'll give them some heavyweight accounting across their head, they would not bother you again. So it could be used as a lethal weapon. So there are multiple use of your textbook, in addition to gaining some good knowledge from it. So that table 3.2, you should know. Adverse opinion, auditor believe the financial statements are not presented fairly in conformity with GAAP. And they give you some examples of reports on page 65, at the bottom of page 65 of adverse opinion. Disclaimer of opinion on the bottom of page 64. They give you some example of disclaimer of opinion. Topic 6, how materiality affects the audit report decision. Again, go back to my discussion about materiality. I said there is a quantitative aspect as well as a qualitative aspect. If something is immaterial, we will still give a standard unqualified opinion. So depending on the three circumstances that we talked about, if we're dealing with a scope limitation and it's immaterial, we will give a standard unqualified opinion. If it's highly material, we will give a disclaimer. So you probably want to write next to scope limitation, a qualified or a disclaimer. If it's a gap departure and it's not material, we'll give a standard unqualified opinion. If it's highly material, we'll give an adverse opinion. If it's moderately material, we'll give a qualified opinion. So you could give a qualified or an adverse. And the third one, when we deal with independence, you are either independent or not independent. There are no middle areas. So it will be a disclaimer of opinion. And that's how materiality affects the audit opinion. Now we have and what is materiality? A misstatement in financial statement can be considered material if knowledge of the misstatement would affect the decision of a reasonable user of the financial statement. And here they talk about the three levels of materiality that I just spoke about. And the materiality decision, whether it's an unqualified, an adverse, or a qualified opinion. And they give you examples. Materiality decision for non-GAAP condition. Dollar amount compared with the base. The base generally is current asset. Measurability, you must be able to measure it, and the nature of the item. Materiality decision for scope limitation on the audit report. If it's not material, it will be unqualified. If it's moderately material, it will be qualified. If it's highly material, it will be a disclaimer of opinion. Part 7, draft appropriate modified report under a variety of circumstances, and you could go through and look at those. The examples we talk about in the book. Auditor scope has been restricted, what the report will be like. The statement are not in conformity with GAAP, what the report will be like. And the auditor is not independent. The auditor is not independent. It's on figure 312 at the top of page 66. Last topic, determine the appropriate audit report for a given audit situation. And they try to paint the auditor decision process. You decide on materiality, decide on the appropriate type of report, and then you'll write the report. Now, when you have to write these reports, you don't go write it from your head. You go and select a report, that's a sample, and you just modify it, right? That's where the cutting, pasting, and alteration comes into handy. So we do not have to remember all these reports in our head. If you remember the standard unqualified report, any other report we talk about will be a modification to that standard unqualified or a variation of that standard unqualified opinion. And lastly, topic 9, understand proposed use of international accounting and auditing standard by US companies. We're not going to talk too much about international accounting standards. That's not part of this course, okay? And that concludes our lecture for today. That concludes chapter 3. Your homework in chapter 3, please do them, post them up on the discussion board. Don't be one of those people that did not, because as you see in chapter 2, there are only 15 people that posted. If you're late, you cannot post it. Nobody can go today and post their homework for chapter 2 up on the discussion board. So please do your work on a timely basis. Read the chapter, go over my lecture slide. Sometime before the end of the week, This video will be posted to Facebook on my Facebook site if you want to look at it again, or if one of your friends want to look at it, or somebody from the evening course who's taking it wants to look at it, they're welcome to do so. Any questions?
Professor, so basically the qualified is not, so it's basically when the financials are not prepared in accordance with GAAP. So there is a little material.
Well, it could be they're not prepared in accordance with GAAP, or it could be a scope limitation, either one.
Okay, and then the
And
unqualified.
that situation have to be material.
Right.
Right?
And then the unqualified is that it is in accordance with GAAP.
In the unqualified, everything is in accordance with GAAP. There's nothing materially departure from GAAP.
Okay, and then if it's the major materiality, then that's when you use the disclaimer or the
That's when you
adverse.
use the disclaimer or the adverse. You got it.
Okay.
Any other questions? Read the chapter, do the homework. When we get back on Tuesday, if you have any questions or anything that you want to clarify, I'll be happy to do so. Okay? I'll talk to you all on Tuesday. Have a wonderful
nice week, Professor.
Thank you.
Thank you.
Take care of yourself. Stay warm, okay?
We'll try.
All right. Let's hope the temperature get up. After this weekend, it's going to be 2 months of winter already finished. So we're getting near to the end. All right. Take care, everyone. Bye-bye.
See you Tuesday, Professor.
Yes.